Is AT&T stock a buy, sell, or a hold? I'm going to answer that question in this video looking at revenue, cash flow, profitability, long-term debt, and valuation. Interestingly, you'll note that I'm not mentioning the dividend as part of this evaluation. When I'm looking at stocks, whether or not they pay out a dividend doesn't really make a difference in my investment decision. So let's jump right in, starting with revenue. AT&T's total revenue in the trailing 12 months was 121.44 billion, and you could see in this chart here of AT&T's revenue in the last decade a huge drop here, and that's not because AT&T's business declined substantially. It's more because it divested the direct TV business. It sold that part of its business, and so with that sale, revenue recognition came down. So overall, the business, the core business, didn't decline. Rather, it was because of a sale. Now, I will note that AT&T's business is not a growth business. Investors cannot reasonably expect AT&T to grow revenue at anywhere near double digits over the next decade. In fact, if AT&T can grow revenue anywhere near mid single digits, anything 4, 5, 6%, I think investors should be really happy with that result. That's because AT&T's business, it's operating in a saturated market. There aren't very many new customers to attract. And so one of AT&T's few available options to grow revenue is through price increases and adding incremental services to consumer accounts. The next thing I wanted to look at is operating profit margin over the trailing 12 months. And in this regard, AT&T is doing a solid job. Operating profit margin of 19.92% in the trailing 12 months puts it in the category of solid to very good. Now, this margin has been increasing over the years, and in fact, with the divestiture of the DirecTV business, the operating profit margin has increased as the core business is more profitable than the DirecTV business was in the last several years. I also wanted to look at cash flow from operations again over the trailing 12 months, and you could see this company generates mountains of cash flow, $36.98 billion of cash flow from operations in the most recent trailing 12 months. That's a lot of cash flow to generate for a company, especially when you consider that AT&T generated 121 billion in revenue, and it turned that into nearly 37 billion in cash flow from operations. So in terms of a percentage of sales, AT&T is doing a good job turning sales into cash flow. One concern with AT&T is the massive amount of long-term debt, sitting at 143 billion in the most recent update. However, the company has done a good job paying down this debt, and given that it generates so much cash flow, the debt burden is not so much of a problem because it can always use that cash to pay down the debt, which is what it has been doing. You notice here that debt did exceed 200 billion at one point, and now it's down to 143 billion. Now that interest rates are higher, it's in AT&T's interest to pay down that debt. When interest rates were lower, AT&T wasn't very interested in paying down that debt because it was a source of cheap capital. But now that interest rates are higher, AT&T's management is saying, okay, well, now it makes sense to pay down some of this debt. And so that's what they're doing, paying down some of the higher priced debt when it comes due. And that could be a source of increased profits for the company as it pays down the debt, which will lower the interest expense, which will boost profitability on the bottom line. And finally, I wanted to look at valuation, and AT&T's stock is relatively cheap, trading at a forward price to earnings of just 5.864. This is roughly 1/3 the average valuation of a stock in the S&P 500, according to this same metric. So you're paying a fraction of the valuation you would for the average stock, and you're getting a company that's generating very strong profitability and cash flow from operations. What you're sacrificing is revenue growth and customer growth because AT&T operates in a saturated market with limited growth opportunities. So it's a bit of a give and take. You're giving up that growth potential, but you're getting the excellent profit, the excellent cash flow, and you're getting a cheap valuation. So if I was to say, is the stock a buy, hold, or a sell, I would say AT&T stock is a buy.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.